Coming from a middle-class Indian background, I don't think my parents ever took a loan, just wasn't on the horizon, whereas now it's commonplace. So the vision behind InCred was to serve India's underserved but still credit-worthy consumers. Our current scale is about 13,000 to 14,000 crores of book. We'll end this year at 16 to 17,000 crores. In terms of millions of customers, it's about 2 to 3 million customers.
Would be those 2 or 3 that you'd say were like the core of the challenges that you faced through these years?
The landscape changes very rapidly in India. I've lived through more in 8 years in India than you would in, 80 in the US or in the UK, right?
Would you see the 30% growth?
No way. The broader vision is to make finance intuitive, easy, accessible to every Indian.
Hello, everybody, and welcome to yet another episode of PayU's Let's Talk Scale. This is a show where we feature the best in business, companies that have scaled in very, very tough sectors. The objective of this show is to inspire and empower the next generation of entrepreneurs and professionals to scale up companies in their own domain. My name is Swapnil Kamath, and today we have with us Prithvi Chandrasekhar, who is the CEO of Consumer Finance at InCred. Welcome to the show.
Thanks, Swapnil. Happy to be here.
For people that don't know about InCred, tell us a little about InCred. Tell us where it started and also tell us its current version.
So the vision behind InCred was to serve India's underserved but still credit-worthy consumers. To provide them access to credit. We started with households, which is the consumer part of the business.
Yeah.
We very quickly expanded into MSME or small businesses as well.
Yeah.
But the thought was the same, which is India at that time, say 2016, was a very credit-hungry country. There were a lot of people who deserved credit, but because we had archaic systems of underwriting were not being offered credit by the economy at that time. We came in with a view to using tech and analytics to serve these credit-worthy but underserved parts of the Indian market. That vision still remains true. I mean, we've made fantastic progress in almost 10 years now. But looking out over the next 10 years, I still think that vision is relevant.
Absolutely. Where does your business stand right now?
So I'm with InCred Finance, which is the NBFC, which is a lending business. And within the NBFC, we've got 2 big segments that we serve. We lend to households and to small businesses. So those are the oldest parts of InCred. But we've now taken the InCred brand to many other parts of the financial landscape. So InCred Wealth is one of our big and very successful and very high-profile businesses that offers wealth management to HNI and UHNI clients with our RM network. We now have InCred Money, which, like InCred Finance, is a tech-based platform, but which is also built around offering innovative wealth products to a much bigger market than we can serve through our RM network.
Got it.
In the InCred Wealth franchise. We also have an investment banking business. We did 3 of the biggest deals in the country last year.
Oh, wow.
We have a AMC or an asset management company. We have an AIF, which is an alternative investment vehicle. We've got PMS schemes where we essentially manage a fund.
Yeah.
Something I'm very excited about, given my background, is we're raising money, and we've successfully done the first couple of raises for a PE fund where we invest in startups in sectors that we know well.
Yeah.
Often because, like Fintech, it's a sector that we play in ourselves. So the franchise is now much bigger
Yeah.
than it was in 2016 when I joined.
Yeah.
And that will grow. We will invest in and create new businesses every 12 months or thereabouts. And each of them will follow the path of test and learn, get product market fit right, and then scale up, which InCred Finance has been on now for a while.
What was that factor that made you break out of the NBFC clutter? Is there something specific there which you all did differently?
There were many things we did differently,
Yeah.
but if there were one thing I should call out,
Yeah.
it is that from day one,
Yeah.
our approach to underwriting
Yeah.
in my business, which
Yeah.
is the lending business,
Yeah.
was always algorithm based,
Yeah.
right? Now, at that time,
Yeah.
algos for underwriting were no longer new news.
Yeah.
I actually learned how to do this when I was in the US many
Yeah.
years ago.
Yeah.
But the way in which it was used was often as an assistance to a human underwriter,
Got it.
whereas we actually took the plunge
Yeah.
in the hands of the algorithm
Yeah.
to, I think, a much greater extent than most others in that market were doing.
Got it. So you guys, in some sense, Prithvi, technology was at the heart of what you all were doing, right? Is that a fair assessment in terms of what?
Very much so.
Yeah.
Very much so.
So that was like the key differentiation. What have been your...
Sorry, if I could build on that.
Yes.
Even that at that time was not unique.
Yeah.
A lot of people who set up fintechs
Yeah.
in the
Yeah.
middle of the last decade,
Yeah.
2015, 16-ish, focused on technology,
Yeah.
but they tended to focus the technology on a very slick user experience,
Yeah.
which is wonderful,
Yeah.
but we focused our technology on risk management,
Got
on
it.
using technology, data, algorithms, validation protocols, fraud control
Correct.
on the defensive side of the business rather than on the glitzy UX.
Yeah. Very interesting.
And this is the key, to the word scale.
Yeah.
Paradoxically, playing a very good game on defense allows you to scale
Yeah.
much more substantially and sustainably
Yeah.
than being loose on defense,
Yeah.
being loose on risk management,
Yeah.
scaling perhaps more quickly in the first year or two,
Yeah.
but then losing the race because you haven't got a grip on your risk.
But that takes a lot, right? Because there's so much, especially when you have investors on board, there's so much of pressure always to show quarter-on-quarter growth and to take the approach that we're going to be defensive, right? And yet that's going to lead to long-term success. I think that takes a lot, right?
It does.
Yeah.
We had the right kind of investors.
Yeah.
And also a lot of credit to Bhupi, who's our group founder and promoter,
Yeah.
who understood that this business is about getting risk right. Right. We have had dozens of conversations with VC investors, PE investors.
Yeah.
We have been compared unfavorably to people who were scaling more rapidly than us,
Yeah.
who have flamed out since.
Yeah.
Right?
Yeah.
And we kind of, to the old story about the hare and the tortoise, I think we chose to be the tortoise and therefore won the long race.
Yeah. Very interesting. What have been your biggest challenges scaling up in this business? And I know you guys have expanded into lots of different areas, but let's just focus on the NBFC, the consumer, and the MSME side.
Our current scale is about 13,000 to 14,000 crores of book.
Yeah.
We'll end this year at 16 to 17,000 crores.
Yeah.
In terms of millions of customers, it's about 2 to 3 million customers who are on our book.
Yeah. That's huge.
It's mid-size.
Yeah.
There are bigger companies.
Yeah.
But for a company of our age,
Yeah.
it's good.
It's good. And at what's your growth rate broadly in terms of how is your book growing year on year?
About 30 to 40%.
Okay.
But let me put that in perspective. That sounds like a very high number. We are growing off a small base compared to the size of the market. So I was talking about 16,000 crores, which is good. We are very much on track with our projections.
Yeah.
The personal loan business in India is 14 lakh crores. Right?
Got it.
The business loan business on the same metric from the same bureau is about 11 lakh crores.
Yeah.
And this, over and above this, there are the businesses which are reported to the commercial bureau.
Got it.
So it's a huge market.
Yeah.
We're growing rapidly off a relatively small base.
Coming back to the challenges that you face specifically in the NBFC business while scaling, what would be those 2 or 3 that you'd say were like the core of the challenges that you faced through these years?
The landscape changes very rapidly in India.
Yeah.
It could be, at an extreme example, demonetization. It could be the DLG or the digital lending guidelines that the RBI issued in 2022. It could be the new master directive that the RBI has issued on KYC, which came out like last week. There are new guidelines on co-lending.
Got it.
There have been, upheavals in the norms regarding FLDG, and I won't get into explaining what that means. And understandably so. This is a young economy. The norms are changing. The infra is still maturing. But, I've lived through more in 8 years in India than you would in, 80 in the US or in the UK, right?
But would you see the 30% growth in those markets?
No way. So the buzz that you get out of working in a market like this is totally different.
Totally different. When things are, economy nominally is growing at 12, 13%, companies, and this sector is so huge, right? That you all are in.
And to underline that, that is a growth rate of a huge base.
Yeah. Absolutely. So since this is a show on scale, we're going to ask you many more questions on this, right?
Yeah.
So in your journey of scale, tell me about what changed as far as, say, your team structures are concerned, or your credit risk processes, or your technology adaptation that really proved critical in sustaining your growth.
No, we've been true to our vision, but I'll call out the key, which is get your risk right, get your tech right before you scale.
Got it.
Right? Yes, we have grown very steadily over the last 9 years. But a lot of that actually happened post-COVID. And a lot of the work we were doing pre-COVID was building the foundations that we, putting story after story on top of now.
Got it. So I think the interesting point that comes out is very often probably stuff like tech is an afterthought for so many ventures. They're like, okay, when we scale, we will have a look at that. But what you're saying is, no, get that right first. Right, which is your risk management and a strong base of tech. And that will help you.
Correct.
The process.
And to your point about the investors, that's important because it took patience.
Yeah, absolutely. Right, for that to happen. How is AI changing your world? Because there's been just so much of buzz around AI and the benefits that it brings to business efficiency in some way over the last 2 years. Have you seen any dramatic changes in how you operate thanks to AI?
Let me break that up into 2 different parts. The first is predictive AI. And the second is generative AI.
Got it.
Predictive AI is a part of our DNA. It's stuff that I've done for years, even before coming to InCred. The tools available for predictive AI are still getting ever more powerful. The computing power we now have is spectacular. The depth of data that we now have is spectacular, all of which make predictive AI today a lot more powerful than it was even 10 years ago.
Got it.
And that will continue.
Got it.
And to the earlier point about risk management, that sits at the foundation of our risk management.
Got it.
And to be clear, it's not only risk management. So if I build predictive models for risk, I also build predictive models for propensity or for customized user experience for different profiles of users. All of that has been a part of our DNA since day one. And, while it gets better, I don't think it's a change.
Got it.
What I think is a change is generative AI. So we haven't been doing that since since day one, and I think the technology has kind of become more accessible really over the last 2 years or so.
Yeah.
We have many pilots running in the Gen AI space. We don't yet know how it will play out at scale. My hunch is that it will be hundreds of small use cases which add up to a substantial bottom line impact.
Got it.
Rather than one killer app.
Prithvi, how have you seen the consumer mindset change in terms of taking loans? And when you talk about the consumer, I want you to address the household, and I also want you to address your MSME consumer, right?
Yeah.
So have you seen a change in mindset over these 8 odd years that you'll have been around for?
I think it's more a mindset that was already in place 8 years ago, but that to me was a surprise, which is coming from a middle-class Indian background. I don't think my parents ever took a loan, and I don't think any member of my family did, as far as I know. And it wasn't even taboo. It just wasn't on the horizon. Right? Whereas now it's commonplace. It's a part of daily life.
Got it.
Right? So I don't think that is a change that's happened over the last 8 years, but it's probably, kind of built up over a longer period than that. But I think that is very much the case, which is it's just a part of everyday life.
Got it.
Buy something, pay by EMI. What is also the case that we see a lot of is, I just realized I said buy something, pay by EMI, tends to imply that is for discretionary consumption. Most of the users I'm seeing for credit are really a substitute for insurance. So these are very high involvement use cases. The amounts of money needed are more substantial. House got flooded in the Bombay monsoon. My house got swept away during the Chennai floods. Elderly person in the family needs medical assistance. It's a lot more expensive than it used to be. Insurance is not available for my dad now that he's in his 70s. How do I fund it? Right? Kids coming through to 11th, 12th. Heck, I need tuition and it's very expensive. Where do I get the money for the tuition master? Mostly the use cases that I'm coming across are not, I want to go for holiday in Tuscany or...
Correct, but that's what the perception is very often, right? When we
which is why I thought I would talk about that. And I think the reality is, as a country, we are massively underinsured. And insurance and credit are mirror images, right? Credit is basically moving money from the future into the present. And insurance is moving money from the present into the future. The mirror images. We're a massively underinsured country. And the role that credit plays in our everyday, experience, certainly in the household segment, is as a alternative to insurance.
Is there an insurance play that InCred has in mind? Do you all have a license, or what's happening there?
We should talk about it shortly. We've, in fact, just obtained an insurance-related license.
Okay.
From a balance sheet viewpoint, we don't carry insurance risk on our own balance sheet. But we do distribute insurance.
Got it.
And given what I just said, I'm keen to kind of take it to more Indians. And we'll see where we get to.
Absolutely. Where do we see your group in 5 years' time? Give us some projections of what is the scale going to be at of both your units and the group?
So we had an offsite a few weeks ago where we were talking about, for us in the NBFC, the path from here to not just 25,000 crores of AUM, but 1 lakh crores, right? 1 trillion rupees of AUM. And that is the aspiration we hold for ourselves. That will clearly need many more products, much more diversification than we have today. Yeah. But to the earlier thought about, we seed a new business every year. And it takes time for these new businesses to get risk right, to get their tech right, and then scale up. That's what we're building to. So will it be 5 years? Maybe, give or take. But that's certainly the vision we're motoring towards. Yeah. That would also be just one part of the much broader InCred franchise. The broader vision is to make finance intuitive, easy, accessible to every Indian, right? Whether the less privileged sections of society who are looking for credit or the more privileged sections who are not investing their money as smartly as they should simply because the wealth markets are not as developed as they should be. Yeah. And to make it simple, to make it easy to use, to make it not befuddling but obvious. Got it. That's where we would want the InCred brand to go.
Correct. And do we see you in international markets as well?
To some extent, yes. We're already in 3 international markets. Okay. We're in. We have wealth offices in London, Dubai, and Singapore. Okay. No reason why not.
Yeah. And dealing with customers from... But I can
tell you, I mean, we deal, like Singapore office has Singapore clients. Yeah. But I can tell you that, going deeper into the Indian hinterland is an equally big and equally important opportunity, right? So like here in Maharashtra, we started business in Mumbai. Yeah. We then started Pune and Nagpur. Yeah. We now have Nasik, Aurangabad, Sholapur, Solapur, Satara. Why not Jalgaon, Latur, Wardha, right? These are on their way.
Absolutely.
And this is just Maharashtra. It's the same story in Tamil Nadu or Uttar Pradesh, right? Yeah. So there is a huge opportunity that still remains relatively untapped in the hinterland. And I see that as exciting as taking our methods to other countries.
Yeah. Prithvi, it's been a pleasure talking to you, right? And you've been so articulate about sharing the InCred story. Like I mentioned, for some reason, I've been tracking you all for a really long time. So your success as a franchise is really heartening for me to see. The work that you're doing is important to India because giving credit to people that need credit is an important thing for this country. You guys are doing a fantastic job with that. I hope you continue to grow over the next 5 or 10 years to the aspiration that you'll have set for yourself.
Thank you so much. Look forward to meeting that aspiration.
Yeah. Thank you.
Thanks, Swapnil.
Thank you.